G'day guys, welcome back to the market update for the month of May. My name is Willard Lloyd. As you're all aware, April is drawn to a close with a decent move in the ASX 200, up 3%. We did finish on a bit of a downer, but that is the markets for you. It was an interesting month on so many levels. Looking forward, May is here, and in the cooler regions, the colours of autumn are all around. In Canberra, Treasurer Josh Frydenberg is putting the finishing touches on May 11th federal budget, with no doubt dominate the national conversation in the coming weeks. Australia's economic recovery gathered steam in April despite a spike in coronavirus cases overseas and vaccine delays. Australia's trade surplus stood at a healthy $88.5 billion in March, underpinned by strong export prices for our commodities. Iron ore rose 16% in April and 21% for the year to date, due largely to renewed demand from China. In other resources, zinc is currently up 6.5% for the year, copper 27.6%, and more significant gains in cobalt up 44% and tin 33%. It is looking like we are in a bit of a resources boom. Chinese economic growth rebounded an extraordinary 18.3% in the year to March. Prices for our oil, copper, coal, beef have all recorded strong gains. High commodity prices pushed the Aussie dollar up 2.4% in April to 77.72 US cents, although low record interest rates are keeping the strong gains in check. Australian consumers are gaining confidence in the recovery. Despite the winding back of government stimulus payments, the Westpac Institute Index for Consumer Sentiment rose 6.2% in April to its highest levels since 2010. One reason could be the booming house prices, up 2.8% in March and 6.2% over the year, according to CoreLogic. Not so much welcomed are the rising petrol prices, which hit a 13-month high in April. While higher prices lifted inflation from 0.6% in the March quarter, it is still running at a low annual rate of about 1.1%. Rising employment is also a cause for optimism. There's a job bonanza. Employment increased 70,700 in March. The jobless rate fell from 5.8 to 5.6 in April, and the federal government has announced it's targeting a rate that is going to begin with a 4. This will be supported by spending initiatives in the upcoming budget. Job vacancies are on Indeed.com are 43.1% higher than they were before the pandemic. As the economic recovery continues, Australia appears to have pushed through the end of JobKeeper as jobs continue to grow relentlessly. There are actually just over 3,000 deferred mortgages remaining with the Australian largest lenders. Hundreds of thousands of loans were finalised, and the banks are now saying that the worst is now over. For the 5th quarter in a row, Tasmania has held the mantle for the best performing economy, and the ACT remains in second spot. However, there is little to separate the 5 from the other 7 economies, with Western Australia in 3rd, Victoria in 4th, South Australia in 5th, followed by Queensland, New South Wales and last, Northern Territory. Tasmania has been on top for the 5 straight surveys, and the second ranking ACT maintains its highest ranking for 4 years. The 3rd position of WA is in its highest ranking in 6. Today's Consumer Price Index, the RB's standard measure for inflation, showed an 8.7 spike in the price of petrol through March, and this was a significant increase which helped CPI up 0.6 over the course of the month, supported by no small part by a 1.5 lift in medical and hospital services and a 5.3% bump in pharmaceutical products. Even so, the CPI increase of only 0.6 falls well below the Analysts' 0.9 expectations. The ABS measures for the underlying inflation at only 1.1%. Globally, central banks have bought $1 billion worth of financial assets every hour since February 2020 and $21 trillion since the GFC. $8.5 trillion in 2020, $3.4 trillion expected in 2021, and then in 2022 it looks like they'll be spending $400 billion. Now to the Kofkin Bond Modelled Growth Portfolio, we have actually seen a gain of 0.6%. An outstander in the top 10 holdings has been Alphabet, up 7. Alphabet delivered some good Q1 results that beat the street, and the analysts there were expecting a revenue of 5.51 billion. Alphabet actually hitting a revenue of 55. Tesla posted a good quarterly profit of 438 million after sales jumped 74% from a year ago, but the stock fell after the earnings. Thank you for tuning in, and more news next month.